What if I told you you could get a copy of the EdgeFinder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of EdgeFinder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the EdgeFinder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content. What if I told you you could...
So I've been making YouTube content around trading for a really long time, but I have to be really real with you guys. It has weighed on me, and there's a lot of naysayers out there, and I have decided that I'm going to take a break, and I may never come back to making trading related content on YouTube. In fact, I have always wanted to be a Minecraft YouTuber, and so I think that's the new direction of this YouTube channel. From now on, we're going to be making Minecraft videos. We're going to talk about what's going on in my Minecraft world. And hey, who knows? You know, I'll still be trading in the background. So if you want to join our Discord and stuff, you can still trade with me there. But this channel will definitely be focused on Minecraft. Okay, April Fools. But in all seriousness, I do kind of want to play Minecraft with like a bunch of trading people. So if you're interested in Minecraft, I've played this game since I was in like 8th grade, and we were talking about at the office, making a Minecraft server just for fun for like A1 trading people. So I don't know if that's something you're interested in. If someone knows a lot about setting up Minecraft servers, we could really use some help with that because I really don't. But anyways, April Fools, the channel will continue to be a trading channel. For now, I don't know. This Minecraft thing is pretty fun. You should try it. And I don't know. Just stay tuned on that. Wait, can you hear that? No, you can't. Hold on. Why can't you hear my sound? Oh, no, wait. No way. No way that happened. All right. Good morning, everybody. Welcome back. I just love April Fools. That was an awesome edit, James. Shout out to the producer behind the scenes. That was awesome. I do love Minecraft, though. And in all seriousness, I genuinely, if anyone here is like a Minecraft person, like you know how to set up servers, you know how to like moderate them. I don't know, man. I might put this on Upwork or something and like hire someone to be a Minecraft server manager and make it so like if you're a member in our Discord, I don't know, you can join our Minecraft server. I feel like that would be so fun. Anyways, I'm almost 30 years old talking about Minecraft. So anyways, let's get into some markets here. Thank you for bearing with me on my nonsense. And guys, we got the stock market ripping higher, which is a nice start to the April move here. You know, first quarter was in the bag, rough first quarter, right? You pretty much went nowhere and then you went down. And now to start out on April 1st, at least, you've got a nice start to maybe a bottom in this market. Let's take inventory here in regards to what we've got. We've got a 10% drop in the S&P 500 from peak to trough, which is kind of your run-of-the-mill pullback in all, you know, essence. However, you know how these things always actually go is in the moment when the markets are, you know, down, it feels like the end of the world. Like you look around and it's like everybody is super perma bearish. It's all going to nothing. You know, this is going to be an ongoing thing. And then suddenly the bulls start getting they start actually making headway, and nobody believes it at first. I'm going to say this. I think you could be seeing that take place right now. I've been doing this trading thing for a really long time. And my favorite thing to trade and watch is, of course, the US futures or the stock market as a whole, the index. I love watching the index because every time you get a market bottom, it feels the same. It feels pretty helpless out there. It feels like everyone's bearish. Everyone's, markets are going to move down. It's not going to, this is going to be a multi-year thing. And then when the market starts ripping, it's hated, right? People are like, no. You can't trust that. It's going to keep going. It's over. This is a false rally, right? That's every single time the market's down and gets a pop. That's what people start saying. Now, to be fair, it could be, right? We've had a couple of those here, but it's pretty indicative of market bottoms that you have really, really pessimistic outlook out there. And then the market starts bottoming and it keeps going up and it keeps going up, and nobody, people fade it. They're like, no way. It's not going up. It's a fake out. And then sure enough, pretty soon you're at all-time highs again. And that game has gone on for years and years and years and years. Now, do I think that the bottom is in the stock market? I'd say there's a good chance. I'd say there is a good chance that the market bottomed in the last few days. Never a certainty. Something could change. Some dynamic could shift, but it seems pretty clear that we got everything that we were looking for. Let me remind our game plan on this channel. VIX down, yields down, oil down. And you can add layers to this, right? Sentiment was also in the dumpster and still kind of is. We got all of those things confirming a bottom. And there was another thing that we talked about. The other thing that we talked about is two-way efforts for ending war. Okay. So notably both US and Iran. Okay. These were the things that we've said over and over and over on the channel that we'd be looking for to mark a bottom in this market from just like focusing on this geopolitical headline spin, right? These things, yields down, right? You want to see yields cool off, the VIX come down a little bit, oil move down. Meanwhile, you also want to see it coincide with a two-way street effort for ending the war. We already know that the Trump administration has been pretty heavy on the, finding ways to either ceasefire or end this war. And now I would say that even ramped up from the Trump side, with the statements of basically being like, we don't need to take back the Strait of Hormuz. That's someone else's problem. We've accomplished our mission of, stunting the ability for Iran to have nuclear weapons. Again, we've said this from the beginning. The Trump administration, whether you like or dislike them, always had the back pocket, hey, we already won, right? They can always play that card and say we already won, right? Because militarily, Iran has been devastated from this. Meanwhile, yes, the Strait of Hormuz remains under the control of the Iranians. So in their mind, they were like, hey, we still have this. But the U.S. can walk away and say, hey, they're not going to, we accomplished our main goal. No nuclear weapons. All right, we're out of there. And that definitely seems now the new strategy of the Trump administration is, all right, we don't even need you to talk. We don't even need a ceasefire. We don't need anything. We just needed you to not have nuclear weapons. We now withdraw. We can claim a victory. And the market loves it, right? I mean, that is a violent move higher, right? That is a 4% up move on the idea that the U.S. is just simply going to walk away, withdraw from the Strait of Hormuz stuff instead of boots on the ground. A big shift, right? A lot of people, myself included, I thought, hey, pretty good chance we could see boots on the ground. You have this Karg Island thing. So again, regardless of your thoughts politically, oh, we should have done this, we shouldn't have done this. Again, we're not here to debate that, etc. There's millions of other channels for that sort of conversation and bloodbaths in the comment section. But from the purpose of this channel, where we focus on financial markets and actually trading the markets and trying to keep a level-headed and not trying to dive into the politics side of it, the market likes the idea that, all right, we're probably not going to see some super long, drawn-out conflict that could keep oil prices high forever, right? That taken away is medicine to the market. Market's like, bingo. All right. Trump and team can do what they'd like. People can bicker and go back and forth on if he was right or wrong for doing whatever. Who cares? Markets are like, oil prices are unlikely now, or less likely, I should say, to spike to 150 or $200 a barrel. People were talking about $200 a barrel oil. Look, something could still happen. You never know for certain. But at least the posturing that we saw in the last 48 hours, Iran open to the idea of ending the war, as well as US saying we're just going to withdraw and let other people, deal with the oil situation. Again, market loves it. So the idea of ground invasion being significantly less likely is a very positive thing in the eyes of the market. We can also see this in oil price. Remember, again, our big three: VIX, yields, oil. VIX is down again today. Oil's down, tepidly, and yields are down. So we'll take this, right? This looks like, in my opinion, I have to just, again, stick to the game plan here. This looks like a possible market bottoming pattern. What I would like to see, there's a couple things. From a technical perspective, we have the 200-day moving average overhead. That can still act as resistance. So I would be careful with this. You have now a lot of the things that worked in our favor, right? The 100-day moving average, the 200-day moving average. These levels were safe points, checkpoints for the bulls on the way up. For the bears are probably now going to be looked at as fair value for opportunities to be more on the sell side. By the way, I think we just had, or did we? I think I brushed over news this morning with my whole intro. Let me see. Today we had, so retail sales just came in. They were better than expected. Very nice. Both core and headline retail sales. By the way, guys, consumer confidence yesterday was strong. The consumer, was expected with all the gas price, upsets, etc. People were expected to vote with confidence that they were feeling worse off. Not so much. We had good consumer confidence yesterday. Consumer confidence came in at 91.8 compared to 87.8. The index showed a positive development there. So again, and by the way, during all of this, do you know what has been happening in the stock market in terms of corporate earnings projections? They've been going up. So with all this Middle East crisis stuff, you would think, oh my gosh, companies are going to take a hit. Well, corporate earnings forecasts, especially for tech stocks, have actually been getting lifted during all of this stuff. So again, I think that I made the case, and I got to bring in Chris Pulver here in just a second. But before I do, just while you have the QR code on the screen, special announcement. We just kicked off our EdgeFinder anniversary sale. A lot of people tried it out during our free week event in the past week, and officially now it is on super sale. If you are interested in checking out the EdgeFinder at 40% off, scan the QR code that is right below my screen, or head over to our website, a1trading.com/EdgeFinder, if you want some details on how you can take advantage of the huge discount. You can save $560 for a limited time. That is now available on our website. Head over to a1trading.com/promotions, or just go to the homepage, click this little icon in the top right, and you can now officially take advantage of our many different discounts going on right now for EdgeFinder. Some of you guys were looking for stock box as well. That is all alive and well for a limited time during the month of April. Our sale has just kicked off. Okay, guys, we'll bring in Chris Pulver here to the conversation. As we have good retail sales, consumer confidence was upbeat.
kind of a little bit of a reversal in some of this stuff taking place here in this market. Let me see if we can bring Chris in and have him join the conversation. Let me see. We'll do the 2 hosts and hold on. Let me just switch this out. And we are good. Hey, Chris.
What's up? Happy
Chris,
Wednesday.
Happy Wednesday. It's kind of an interesting 24-hour period, 48-hour period here. At least from my perspective, it looks like you have the formations or the trying here of a little bit of a sharper bounce in markets. We'll see if it can last. But it seems like for now, you have a lot of stuff that kind of went in favor of the bull case in the last 48 hours.
Yes, I think this is the de-risking opportunity for the smart and savvy investor. That's what I'm doing.
Okay.
I'm not saying I'm smart and savvy, but I'm saying that this is what I'm using the opportunity for.
So you're thinking this
swings.
is an opportunity to take some risk off the table, take
Absolutely.
some profits. Okay.
Yep. I think because like I would be too complacent if I felt like this is the bottom, a little 10% correction. I mean, look, right now, technically the market needs to prove that it can overtake the 200-day moving average, because I think everything lines up now where this 200-day moving average, the bears could step right back in. The 6750 to 6800 level, the bears could step right back in. So the bulls, I mean, and this is the crappy part, is to say like, oh, this is the bottom. It really is going to be a hindsight bottom, because I'm still like quite skeptical that if this is a, any type of deleveraging where the market internals, the market flows are showing, weakness, that this move is going to be another leg lower. And it's way less painful if you're de-risking and having more capital and not having that same type of pullback, because here's a good test. What was your account down as the markets and indexes were down 10%?
Mine, I was fortunately very low beta to the account.
Yep.
I've actually not had a very big drawdown at all, a couple percent.
Sure. So I was like right at 2%. So the market's down 10, I'm down 2.
Very nice.
And that's great. But I also know that I still had lots of exposure where that 2% could have grown. Like let's say price follows my arrow here. That 2% becomes 4 to 5 pretty quickly on that next leg lower, right? And if we make lower lows, all of a sudden I'm closer to my ratio spread put levels. I'm closer to my naked put levels. I'm closer to the the levels that I've been intentionally trying to avoid, where it's like I'm not really looking to get assignment on anything. And I don't think I'm that close. I mean, I built an entire workspace out on some of the tickers that I have, that I know that I'm far away on a lot of the stuff, but it doesn't mean that I'm avoiding volatility entirely. So Tesla 220. It's a long ways away, but it's like if we have another leg lower on Tesla, or it was high to low, lower high to lower low, it still doesn't make it any more enjoyable when I've got to sit on the trade for another 6 months in expiration. So I'm going to use this as an opportunity to de-risk and de-leverage, and I'm taking some profit along the way. So I posted this morning for Pulver alerts. If you have any ratio spreads with me, if you have any naked puts with me, there's a variety of tickers that I've had, and so I just kind of put a blanket message like assess your trades, assess your naked puts, assess your trades with me, for that reason. Because yesterday I went from let me get my broker platform up here. Oops, it's on the other screen. So I was at right around 2 million, Nick, in buying power, and now I'm almost 2.4. And I was doing the math roughly last week. I'm like, if I get some of this exposure off the table, I'm going to have almost $400,000 in buying power back. So it's still, I've still got another like 3-4 accounts to prune through this morning. But this is a good thing. So I'm hoping that maybe I get this closer to like 2.45, 2.5, and then I'm sitting back to 50% cash. And then I feel like I'm a lot better equipped for whatever comes next.
Yeah, no, I think that's a perfectly prudent way to look at this market. This has been a headline-driven market. At the end of the day, the VIX is still at 25, even after the 4% off the lows rally that we've seen in tech. You do have other problems that I've heard this sentiment shared in many podcasts and things that I've listened to. Chris, is like, okay, even if this Iran thing rolls away, we have like 4 other things to fill the worry spot in the meantime, right? You have the software disruption story, you have the private credit story,
Yep.
you still have okay, so here's another dynamic maybe we can chew on, is this concept of like, all right, US wants to potentially just withdraw from the conflict entirely and be like, all right, other countries, you guys deal with it. UK, France, et cetera, a lot of the places that are very dependent on oil, you guys, you're on your own, figure it out. And Trump notoriously said yesterday, quote, get your own oil.
Right. And
so,
I'll remember this. It's like, I mean, way to be an ally.
Right.
You know?
So you have this dynamic where the US may just withdraw. And then the question becomes, okay, so the market is cheering that, like, all right, we're going to not have boots on the ground. But Iran is still in control of the Strait of Hormuz. They are still very unhappy with Israel, and they're not stupid in the sense that they have taken a militaristic hit off of all this. Maybe they can recoup their own losses by charging a premium on oil going through the strait.
Right.
And
like a toll, essentially.
And what does that do to global oil price? Well, it hikes it. It's a price hike. If you put a tax on oil going through the Strait of Hormuz, oil price can remain elevated. So despite the sharp rally in the stock market, which may be partially due to Iran maybe not targeting, if there is some kind of ceasefire, if there is some sort of agreement, et cetera, maybe they won't attack, data centers that Amazon has in the region or something like that. But there's still this worry that oil prices are still at $100 a barrel for WTI. So you still have that elevated inflation risk to go along with this. And it's really tough to give the market some kind of certainty as to where oil price will go next.
Yeah, I think that, I mean, $100 it kind of means everything in the equities market right now. $100 oil. I mean, yesterday, Nick, was a wild move. Here is, let me find my workspace here. So I built this indicator and I use this thing every single day. It's been really, really reliable. I mean, even last week with the market selling off all week, the market was down, over 2%. I made money every single day with 5 winning days. Yesterday, I finally got a little taste of the upside getting, and this has happened, man. It's like Jackson Hole did this to me. A couple of Trump tweets have done it to me. It's like, it's still defined risk. I battled my face off yesterday, tried to defend a lot of my trades. I ended up losing like $500 or $600 yesterday, which is fine. It's manageable. Like I mean, this is when you trade zero DT, it's all about risk management because you're typically taking on a bit more risk than reward. Anyway, point is, I fought back yesterday, but if you look at this box here, this is the gap adjusted expected move. I mean, the market was supposed to move about 67 points yesterday, and that is from the open. So we have opening price, market closed the day 111 points higher, almost double. In fact, it did almost hit like a full double there. So we had like a 2 standard deviation move, very out of the norm, kind of outlierish for intraday pricing. But usually what I see is we had an interesting setup yesterday where every quarter, and it starts today officially, every quarter there's this thing called the JP Morgan Collar Trade. It's essentially JP Morgan's investment arm going out to like 10 and 15 delta calls and putting like basically a call wall out there. It's like a 10 or 15 delta. I'll look at this price right now. But you get a live feed, in what, 45 minutes. So you look at like 10, 15 delta calls, you look at 10, 15 delta puts. That's essentially where there's major gamma, major option flows and hedging flows that start today and go all the way into the end of June. Okay. So yesterday there was the put wall that was at 64.75, and we started trading all the way down here the day before at 63.18. So we had that surge rally. We have that, like, this also shows, number one, how powerful market makers are. Number two, how powerful zero DT flows are. And I had that 64.75 on my charts all day yesterday, and I wasn't surprised the price got there. However, I was a little bit surprised that we surged inefficiently from 64.50 all the way up through 6,500 and still finished the day at the highs. And that, as a trader that does trade zero DT, if the market ever finishes the day at the high or finishes the day at the lows, it's very difficult, especially when it's like breaching, on rare occasion, when it breaches those expected moves. So anyway, it was an outlier type day. I literally, when this happens to me, I shrug it off because I know that what the market can't really afford to do is do this again. It can't afford to necessarily have another unexpected, it's too big of a move one way or the other. It's like when this happens, the market usually goes higher volatility, higher implied volatility is going to be a lesser than actual. Does that make sense?
Yep.
So that's what today I would expect to be, is like maybe some drift, but I don't think we're going to be breaching necessarily levels today.
Yeah, and I also just speaking of some technical levels too on the gold side of things, gold's catching a little bit of a bid here today. Well, has been the last few days. I would give a little bit of caution as you do get this rally. It is trading alongside equities in the sense that it's liking that. I mean, the big thing that I'm seeing is that, all right, if $120, $150 oil is less likely due to a ground invasion, maybe not happening, if that is kind of what the market is cheering, right? You still have elevated oil prices. They may stay elevated for some time as, you know, the Strait of Hormuz resolves either itself or the U.S. involvement. It's hard to say exactly how things will go, but the point is oil prices are going to stay high, but they're less likely now, I would argue, for them to blow out to 150 if there's some sort of energy destruction in the region, et cetera. Still could happen. Anything is possible, but I think it slightly diminished their probabilities with the U.S. potentially withdrawing. So with that said, the cool off in yields is sort of reflecting like, okay, we're not going to have some oil shock that is way more dramatic than we've already had. So maybe yields can come down just a little bit. And with that, gold is rallying because it's like, okay, maybe we do get a rate cut this year. Maybe we do have, you know, maybe we're not going to see a rate hike this year. And so gold is rallying. However, I still think you have to remember where we're coming from a macro perspective. We have talked about this, and Chris, you've done really well with the metals. I have as well. We've done really well in the metals, and I would say, and I'm pretty sure you're in the same camp with this, is the environment for gold and silver has changed. We had a couple easy years, and I know that sounds like hindsight, but it's just true. You had inflation cooling, low oil prices, interest rates coming down globally, central bank buying. I mean, it was kind of a golden era, I mean, pun intended, for precious metals, right? You had like the perfect storm of like uncertainty, and then you had the Trump administration takeover, which of course brings with it potential uncertainties and volatility. We were seeing some of that now. You know, whether you like or dislike the guy, he has big opinions and big objectives, and that brings uncertainty into the market. So all of that to say, you've now lost maybe the most important story, which in my view, the most important story to gold is the path of central banks and whether they are easing or tightening, which we felt in the beginning of this year was very likely that the policy was going to continue to ease. And now not so much. Now it's very much up in the air. So even at these levels, 4,800 gold, 4,750 gold, I'm just a little bit cautious, and I don't know that the forward returns of gold are going to be the same types of moves that we've seen in the last few years. So my perspective is kind of neutral to slightly bearish in terms of gold's move right now. What do you think?
Okay. I could just see like a healthy bottom forming. I mean, if we go, let's say we just take I have to praise gold for the ability to, once we had the parabolic move and it almost convinced me to buy, I'm glad that I didn't. And, you know, this chart, I put this on my chart back in December, said end of March, gold probably showing signs of correction, the 200-day moving average. We had the crazy fall here in January, February. We had a B, C, D, perfect symmetry, and it started to top out there and fall, hit the 200-day moving average. I'm not necessarily bearish, but I could say that, okay, so we have some pretty good structure in here. If it fails, if gold fails in here, and makes another lower high, then just connect the dots. And I think we have maybe a organized channel. But I agree with you. If anybody's trying to get crazy bullish and speculative on gold, think we're going to 5,600 right away, going back to 6,000 right away, that would be surprising to me. I'm not saying we can't, but it's like that's not what I'm trading for. My trades right now that I started to put percentages back into gold, they're option trades. They're out to 2027. They're out to 2028. I'm not in a hurry to rebuild a gold position.
Well, and I'm definitely in the same camp in the sense that like long term, gold looks like a pretty decent deal if you get moves back low. Chris, I had some really good GLD short put positions. I rolled it, I think just one time, but I sold out of the money puts when we were near that 200-day moving average. Of course, got the initial spike higher, and then I like to take profits on those like around 50% of max profit, like right off the bat. So I was able to get out of there, and then I sold another one, and then I was out of there. So I've been able to play a little bit of the premium game, and wouldn't mind if this thing rolls over, I could, sell some cash secured puts again and maybe get assigned on
GLD for a longer term hold and maybe try one of the old Chris Pulver campaign trades over the next week. I wouldn't mind that at all. So
very nice.
we'll
But
see.
what about, do you have the similar feelings to silver? Are you looking at silver as the strategic play as well as, industrial play, the AI stuff? Like, are you liking silver on the same type of camp? It's like you want to have it in the portfolio as an allocation. You look at, I mean, the premium is not going to be as good when the SLV price is only, you could do a put around like the 200-day moving average. That's like a $55 put. I've got a lot of ratio spreads in the 50s and 40s. And I'm comfortable owning shares there because that was that last big breakout point. The historical high was $50. So if I own it again at previous historical highs with new highs at $110, I'm pretty happy having silver there.
Yeah, and I feel the same way with that. So here's my thought. If I could have everything I wanted for Christmas here in April, what I would want is for tech stocks to take another tumble because I want to buy tech. Candidly, that is where I want to deploy capitals. I want to buy tech stocks. Now, I'm interested in quality. Yesterday, I went on a whole ramble about what do I want to buy? Well, to be honest and to be boring, I just want to buy the Magnificent Seven. But I think they're honestly already at decent pricing.
Yeah.
But I
think they're going to fuel the new IPOs though. I think all the people that have made money on Mag 7, they're going to use that type of capital to park it into a SpaceX IPO, an Anthropic IPO. Like that's going to be the chase this year to keep this market kind of resilient.
Yeah.
I think it's going to be a funding mechanism versus I think the growth of the Mag 7 is going to stall. I don't know. I think we've squeezed a lot of juice out of the Mag 7. And I think they're great companies. They're fantastic companies. But I think to expect, 10, 15, 20% a year out of Mag 7 stocks, I just feel like those law of large numbers, it's very difficult to take $3-4 trillion companies and expect them to double.
I agree. And that's the thing is why do I like specifically the Mag 7? It's because I believe that they are, high quality companies. But if I was more bullish on the market, then I would probably buy something more aggressive, right? But I'm kind of feeling like the Mag 7, they have a lot of levers to pull. And recently, I've been playing around with this here within we have a little bit of a valuation heat map. Which ones do I like the most? And I can kind of build my list here. I should honestly make this a pre-made setting. That would be really cool. The ones I dislike are going to be Tesla. The ones that I like the most are going to be,
even if they go autonomous with humanoids, you're going to dislike Tesla?
Well, I think the story's cool and I think the technology that's working is cool, but I want to pick up some exposure to stuff that I'm like, if the market goes down another 20%, I still like the company. Whereas, with Tesla, I get worried that it's
it's the same thing. Tesla has to be, again, investor mindset is either a car company, which you wouldn't invest in, or it's an energy company and an innovator and a disruptor. That's what I'm investing in. And plus the premiums are pretty solid. If you're doing puts at $200, you can get paid for a $200 put when the price is at $367. So,
well, and I like what you did on Tesla too. And that would be more how I play it. In 2025, best trade of the year, I had an this was just so picture perfect when the market was like near the bottom. I bought some Tesla even on it was a sizable position, but it wasn't outrageous. But that, of course, same with how you're experiencing the nice premiums that you collect. If you're just long the stock and the thing goes, it's insane. But these are the ones that I like: Netflix, Microsoft, Meta, and I do like the idea of Nvidia. These things are trading right now at very, very relatively cheap valuations to their 3-year average. Now, granted, the counterpoint to that would be like, well, for good reason. They're spending a ton of money. They used to be, cash cows in terms of free cash flow, and maybe that story is changing a little bit, but still I think Meta is a beast of a company. I love the technologies that they're building. Everyone uses Meta. Long term, it's a company I wouldn't mind owning some shares in. I already do own some shares in, but wouldn't mind building some more exposure to the Magnificent Seven. But again, I'm not going to chase them, and it would be a scenario in which the way I've been playing it is like, for example, I sold cash secured puts on Netflix. Those I think are actually, I took profits on those yesterday. So anyways, just playing it slow and, picking up quality stocks if we were to see a bigger drop rather than, I'm not going to go chase quantum computing stocks or anything of that nature. I'm just going to stick to the quality stuff.
I agree. That's a good plan. And let's circle back to the de-risking conversation. Are you thinking that this market has another leg lower?
So I think that for now, I'm going to really just watch price. In terms of like short term, like trades, like active stuff. I've been selling cash secured puts, taking profits on the stuff that's bounced, and then just kind of repeating that process. In terms of a technical bottom, if we were to mark what I'd be looking for, you mentioned it earlier, that 200-day moving average is a pretty critical spot. So if we were to see, what has been major levels of support then turned resistance, we start to see that kind of pattern, then from a technical momentum perspective, yeah, maybe we're looking to trade the reversal higher, and I'd put a stop on that. And my style with trailing stops and momentum. So that's a scenario. But for now, I would agree that it's probably safe to stay on the cautious side as you retest some of these critical levels. That being said, VIX down, yields down, and oil kind of down, are at least promising that maybe we have a short-term bounce here.
Yeah, well, you brought up a chart last week on the 4-hour chart for the S&P. Just looking, I mean, I think that is a pretty good way to look at how structure's behaving inside that moving average ribbon. These are all EMAs on my chart, and we saw the market go right to those ribbons, reject, right to the ribbons, reject, and same thing. We've had those. I mean, it's been the interesting like opposite of the last couple of years, which is we've had strong up days that have been faded, like over the next 5 days, right? So having that thrust up yesterday to finish the quarter, I would be really interested to see how the market finishes. And it's only today, tomorrow. We have a shortened week because of Good Friday. But if we have a limp into the end of the week on Thursday's close, and we have non-farm payroll that still comes out on Friday. So I'm still planning on. I mean, I think we're live on Friday. I'm going to be live with you guys if we're having a session. But we have non-farm payroll that still prints, even though the markets are closed on Friday. I want to see what happens, today and tomorrow. If the market's going to start fading this right away, and it was like, hey, way to fight back for the end of the quarter, but it's the same thing. It's like, well, VIX probably goes right back to 29 or 30. One thing I'm a little miffed with is, so 2022 we had a 20 to 40 VIX, a lot, right? Right, for 9 or 10 months we had plenty of spikes between 20 to 35, 20 to 40. I have a synthetic long VIX that is kind of it's a hedge for me. So it's like if we did see the VIX spike up to whatever 40 or 45 or 50, or like we had Liberation Day and COVID levels like 60, 70 VIX, that is like a $500 VIX synthetic long that would pay like $4,000 or $5,000. Yeah. So I haven't seen that trade offer anything more than like $500 profit right now, which is kind of frustrating to me, because I'm like, well, either we have a VIX event which can help symbolize the low, or this market is going to continue that dispersion and churn, where it's just like, yep, one day up and it's going to spend days fading. So after a day like yesterday, I'm probably going to spend a lot of my time just kind of focusing on still selling some out of the money bear call spreads, focus on that, just kind of staying out of the way. It's hard for the market to keep thrusting higher consecutive days. So probably today, that's my plan, is just selling some bear call spreads, out of the money, and see if we just either one, stay sideways, stay calm, but more importantly, stay within the expected move.
Chris, check this out. Okay. Just a new headline hitting the wire here. So Trump says that Iran's new regime president, much less radicalized and far more important than his predecessors, has just asked the U.S.
Jawboning.
And then the next one, Trump on Truth Social: we will consider when Hormuz Strait is open, free, and clear. Until then, we're blasting Iran into oblivion, or as they say, back to the Stone Ages.
What the hell, dude? This dude is nuts, man.
Like, that is a very quick,
If you ever watched The Office, you remember what Ryan the intern did with Creed?
Which time?
Well, so Creed was like, thought that he was like ranting to the world. He had a blog called Creed's Thoughts, and Ryan's like, I just put it into a Google, like a Word document. He just types it in. Like nobody, he's like, nobody needs to see this. That's kind of what we have right now. It's like, that needs to not be out there like this, again, because it's too much, man. Like, it's too much noise, and the markets move on it, but it's literally polar opposite discussions, right?
Okay. So I'm
just asked us for a ceasefire. It's like, stop there, take the win. Right.
I'm trying my best here, because again, I got on here and I was just discussing that yesterday, the Trump administration, and to let me try and stay, unbiased here. Maybe at least the idea, I'm granting a benefit of the doubt here. Maybe the idea is like, we can't let them know our next move. I get that. Maybe there is that. But here's the thing. Yesterday it was, we may just withdraw and, let other people figure it out.
Correct.
And they'll open up the Strait of Hormuz will sort itself out. And then today we see and they wanted a ceasefire. The U.S. wanted a ceasefire. Now that there is the potential for a ceasefire being offered up by the Iranians, now that there is that, we're saying, all right, well, yes, until you open the Strait of Hormuz. So it's always been about the Strait of Hormuz that needs to still. So again, what's the market supposed to take away from that? Well, here's your chart that you mentioned that you
Exactly.
like that I drew up here.
Yep.
This story has played out over and over and over. You get the pop on optimism that something's going to happen, and then just the aggressive fade. So maybe we're just maybe we're doomed for that pattern to keep playing out until the Strait of Hormuz is open. My thought was until you get recognition from both sides of willingness to ceasefire, that would maybe be the end of it. But again, I think price action guides us from here. If you can break this channel to the upside, maybe it's positive developments, and otherwise, again, we've seen this level hold so consistently, fading lower every time we hit it.
Right. Yeah, it's just a noisy. I mean, that's what it is, man. We knew this was going to happen coming into it. I think it's a lot of noise. I'm going to take a trade on futures right now. I'm going to go see if I get 230 credit for this bear call spread. Try to fade this futures move.
So Nasdaq up 0.7% now. It was up a little bit more here in the pre-market. My thought again, like I want to be long the market. I want to, but I have a system for a reason. And to be completely honest, like without trying to oversell, EdgeFinder has kept me so much better off recently because again, we've had price disagreeing with the upside, as well as, implementing one thing that we added, Chris, that I really like that we did is we implemented into the scoring yields, right? So like what yields you're doing play a role. And to be honest, it's the ultimate factor of what equities do is the Fed, printing, or are they not printing? It's really sometimes as simple as that. And we have inflation spiking, we have yields, doing a little bit of move lower here recently, but still higher, right? You still got probabilities for rate cuts getting dashed. We will see, yesterday we had JOLTS job openings that came in a little bit less than expected, but they were okay. And then we have Friday NFP, right? So we'll have the non-farm payroll on Friday, see what that brings us. And I think that, markets will continue to watch that. Again, I'll stay with what I said. If the market does continue to roll over, I am going to slowly add to these positions in my stock portfolio. I think I want to add some NVIDIA, and mostly through cash secured puts, just selling out of the money, cash secured puts. And if I get assigned, excellent, I would prefer it. If I don't get assigned, then I'll just take the premiums that I collect for doing so.
For sure.
One other thing, dollar index still cooling off here, right? You had retail sales was a little bit stronger than expected. JOLTS job openings were whatever. But again, I think that at the end of the day, it is really more about, the Middle East that still remains the biggest mover of, everything, dollar index, gold, oil, stocks, etc. So
I think if the market's going to rip to the upside and really sustain this, I really think the U.S. has to play ball and be an ally. I think for this back and forth of like, fend for yourself, we tried, you didn't listen, we'll remember this. It's like, it just sounds so adversarial and so contentious. It's like, look, I think if we had, an overall interest where it's like U.S. and China, and I know we're frenemies, right? But U.S. and China really could essentially carve the world up and be like, this is where we're going to take our control. And there's like, either we're going to continue to fight for like global domination, or it's like we acknowledge like there's some things that you do better than us. Here's some things that we have that you don't have. And they just kind of carve it out. It's like, this is what we want. This is what you want. We can live in peace as frenemies forever. But at this whole thing with the Strait of Hormuz, it's like, it is right now in the US, I would also be considering, so I've heard trades in the last few weeks on getting long graphene, getting long helium, getting long fertilizer. Commodities are still like a good play. It's like that. The scary part is if those trades work out where it's like, if you're long commodities and they pay really, really well, you're looking at a very similar picture of 2008. That was the last time value really, really outperformed growth. And we are a tech and service-based economy. And so for our commodity space or commodities in general to finally have their day again hasn't really been seen since the nasty times of 2008 when the whole market was down, but you had like a great run in value there for a little bit, and that's just been overshadowed for the last 15 years. So it's not a fun environment. It's like it's good for that window, but I think everybody right now that's in the energy space also knows that this is a good time, but it will not last. Like oil prices are not sustainable at $100, not sustainable at $120, not sustainable at $150.
Yeah.
The world will go away from it. The world will move off of oil faster if we have higher prices. So, I mean, that's the end game of whatever this plays out to be. If we have higher oil prices, we're going to have alternatives faster to consumers now, because nobody wants to pay, 20, 30, 40, 50% more for oil. It's in everything we do. We need to find alternatives. So it's like, that's by necessity. That's the innovation that's going to come with it, because it's going to be driven by demand. So anyway, that's where I'm at. It's like this, that's not a fun theme to trade. It's like, it's good for the year, but that's not a fun theme, because what is coming most likely is going to be worse pain. And I don't want to see like 2008 again, but I'm sure it's not going to be the last time we have a bear market together, Nick.
I agree. Chris, we're out of time here. Thanks for, as always, coming on and sharing your thoughts. Really, really crazy week. I mean, we've been holding out for a little bit of a bounce here. We are seeing the bounce. The question is now, does it get faded? Sounds like you're kind of in the camp of thinking that more likely yes than no with your sale of some credit spreads here.
I'm shooting out of the money. It should be outside the expected move. It should be plenty out of the distance. And I'll do the same thing today in the SPX. And again, I'm not bearish, but it's like, let the market prove that it's got to go up higher than what it's supposed to. And usually the markets are very efficient. So
when you're index wise, trader, it's a spectrum, right? Like bullish, bearish is one thing. Like that's if you're directional. Like obviously, if someone in here has never traded options before, they're like, what are you talking about? But like, it's not in markets. You can do more than just being, I'm long, it has to go up for me to make money, or I'm short, it has to go down for me to make money. There exists in options land the idea of like, I can be a little bit long or I can be a little bit short, and I can make money if the market goes nowhere or if it just goes up a little bit. There's so much you can do with options. But again, that's a whole nother topic. So Chris, again, thanks for coming on, and we'll see you tomorrow, I think, right?
Yep. Sounds good, man. Thanks, good, Nick. See you, everybody.
Yeah. Guys, we are waiting to hear from our next show host. Has not yet arrived in the show, but that is all good. I can keep going here in the meantime. Hey, so last week we did a EdgeFinder free week event, and I want to just, again, if you got a chance to try it out, I do hope that you will continue to share your feedback. We had a flood of suggestions and improvement tips, things that we could add to the tool over time. And as always, we'll continue to add more and more stuff to EdgeFinder. We have a ton of tools in here. We started this product, a little bit of back history on this tool. In 2021, I started trying to build something for myself that would help me to track economic data. And I'm a software engineer by trade. So I'm like, all right, I can figure this out. Very quickly, I realized it was way above my head, the amount of stuff that has to go into automating the components to pulling in all this economic data, to ranking, to scoring it, etc. So eventually I hired some help. And in the last 4 years, since we initially launched the product, April of 2022, it's been 4 years. We have thousands of traders around the world using our tools, and we continue to improve it and add more and more features to it year after year. To celebrate our 4-year anniversary, we are currently offering the tool at a huge discount. We purposefully did the free week last week to give people a chance to try it, and now we have already people taking advantage of the huge discount that we are running through the month of April. If you want some information, if you want access to everything from our top setups feature, right, for example, which gives you the chance to see all of our scoring metrics for economic growth and consumer strength, inflation, jobs market sentiment, what this tool ultimately does that I think it does the best on the market for is it takes all this stuff that we know matters, right? Jobs report, NFP, CPI, FOMC stuff, right? What's going on with the Fed? That stuff is so critical to the market. But what most traders are missing is having some kind of systematic thing that is watching all of that data, pulling it all into its brain, thinking through it, and automatically scoring it all for you to help you get more insights on charts that you may be interested in. So if you trade gold, if you trade indices, if you trade commodities, Forex pairs, having the right tool that can screen all that data and generally give you a heat map of like, hey, this data is telling me this,
or this data is telling me that, right? So if I take a look at, let's see what's interesting on this list. Let's take a look at, I want to find a good one for an example. I don't know. Let's say gold right now. Gold's neutral, right? So gold is a -3 reading. What that's telling you is that, not everything is agreeing. Sometimes you do have something that agrees more decisively, though, where economic growth, inflation, jobs market data, institutional activity, technical bias, and crowd sentiment are giving you some sort of synergy to find a setup that might fit your own criteria for entry, etc. But what this does is it gives you a scorecard of all the stuff that matters, all in one clickable page where you can browse it all for yourself. Again, if you don't have the EdgeFinder and you would like to pick up a copy of the tool, here is how you can take advantage of the discount. You can either scan the QR code that is below my camera, or we just dropped a link in the live stream chat to where you can speak directly to a member of our support team who can help you set up a payment plan if you need it. They get you extra discounts while the stream is live. We are doing 40% off, but if you message in to our support team right now, they can get you 45% off. This is the biggest discount price that we do all year long to celebrate 4 years since we launched the EdgeFinder. So get yourself a copy during this sale event. And what we're going to do here is we're going to play a quick break, and then the show continues with our next show host, Tiger Barry. Stay tuned. Just after this quick break, he'll be taking over. This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Well, what's going on, everybody? Tiger here. I'm going to do the walk of shame this morning. I failed to recognize the schedule was a little different for my slot, so my apologies. You can throw egg at me if you want, but I do have about 18 minutes here before I do believe James pops on after. So anyway, yeah, I'll just get right down to it. If you guys have anything you'd like me to check out, any specific tickers, let me know. I did notice on the EdgeFinder we had quite a bit of rollover here. Let me see. Is that updating? Okay, good. We had a little bit of thinning out on some items. Remember, this bullish and bearish list yesterday was down further. We actually had to scroll down to see the rest. So, thinning out a little bit, but my goodness, taking a look at pound Kiwi, pound Swiss, even getting the FTSE aboard now, FTSE 100. Okay. We definitely do have a couple really strong ones, and that Kiwi dollar, euro dollar remains at the bottom, but we did gain euro pound. Okay, that one bounced onto our list, and it makes sense. The euro's been a little weaker lately. The pound's been a little stronger. So yeah, just let me know. I see German 40. I see gold. I see euro dollar from you, Matthew, Nick, David. Yeah, we'll take a quick look at that. Virtual egg sent. By the way, since you guys called me emo a couple weeks ago, I have scheduled a haircut for tomorrow. So you're not going to recognize me come Friday morning, probably. Okay. I got to get right with the world, especially since I'm the face of another financial media outlet out there. So I'm glad to get that rolling. So yeah, gold, silver, Matthew, as far as gold goes, still pretty well neutral at the moment. It is kind of benefiting a little bit overall today because we did have some more positive de-escalation dialogue coming out of President Trump's mouth yesterday. He's obviously set to speak tonight at, I do believe, 9 o'clock Eastern to kind of update us on the Iran war. But he's basically saying, from the accounts I've seen yesterday, that he's willing to end the war without necessarily having the Hormuz deal completed. So I think that's a good sign. I think the markets are taking it that way. I did notice the futures markets on the U.S. Equities have been up quite nicely since yesterday morning, since yesterday's London Open, I should say. We just had a pretty nice spike upwards. But yeah, let's hop on. But anyway, yeah, just to tie that in with gold and silver, it's getting a little bit of boost upwards as well as a result of some of the speculation, if you will. Remember, gold, silver thrive on chaos and uncertainty. So while that does sound like a good piece of rhetoric coming out of President Trump's mouth, it is still at this moment just speculative. We live and we trade on hard facts and data, right? Not just empty words that come out of people's mouths. So anyway, taking a look at gold, we did finally bust through that overhead supply zone that I had drawn up. We've wicked through on a 4-hour chart. Haven't really closed above it yet, but we are pushing through. So as always, prices like to bounce from important and higher time frame zones, zone to zone. So, I mean, if we're going to continue this upward trajectory, then definitely could see at least going back up to the 48.30 level. That would be my next potential, potential bounce to the downside. If nothing else, at least a reaction, because as we can tell on this over here, this supply zone, we had a nice big drop. We also had increasing volume spread analysis candles, guys. You hear me blabber about looking for yellow and red candles down here. Those are signs of above average volume and ultra high volume as far as the red candles go. So yeah, definitely had some pushing, some strong drop from that. Now it's a skinnier zone, but again, I care mostly about the amount of institutional type activity that's happening on this down move down here. So yeah, definitely could see price coming up. It's really not that far away in the grand scheme of things. We could reach that within this same day, but do have a 200 EMA up there as well. We've obviously been in a downtrend over the last last handful of weeks, but we did break this top here that I pointed out, I think yesterday, and now we've broken through supply. So that's a couple pretty strong looking spots or price points that have been pushed through. So yeah, my next stop is looking here. I don't have this on a bullish or bearish list. As always, I stick to what the EdgeFinder says, and currently we are at neutral. In fact, I think they got even more neutral. If I was looking earlier, I saw silver and gold. Yeah, gold. Okay, so gold's a -3, but then silver, which was on our bearish list a handful of days ago, is all the way up to a -1. So pretty neutral. But as far as the dollar goes, I know we did have some retail sales data come out. We had the non-farm employment change. Okay, so not the major one, not the big one. Okay, this is more the teaser, if you will. But those did come out good for the dollar. So with the retail sales, I do believe that last report came out bullish as well. So yeah, as far as the Dixie goes, as far as the dollar goes, not really going to change it that much on that aspect. So we may not get a whole lot of movement on the dollar as far as the percentage goes. But yeah, dollar going from the strongest currency to now, I do believe it's still the top of the major currencies, but the yuan has passed it up. So dollar and pound are currently tied for first. Swissy is still in the basement. So yeah, nothing really changes. I mean, dollar Swiss pairs look good for buys. Euro dollar shorts, Kiwi dollar shorts. Again, taking advantage of those two currencies over there in the ocean, the other side of the world from us, selling those and buying the dollar. That remains really the top setups as far as I'm concerned. So, but yeah, just to finish up on the gold, I'm just not really interested in getting into a gold trade, even if we had a setup, until we hear from President Trump tonight to see what he has to say. But that's just me. So what else we got? Euro dollar. Yeah, I saw euro dollar there, David. As far as that short opportunity goes, we are chewing through. Well, just to take a step back. So remember, we did bounce already off of this overhead supply zone confluence. And again, guys, even once these zones are done and I'm not using them anymore, I still want to leave them up there at least temporarily, just so I can remember where we came from. So yeah, we did bounce into that confluence, got that pushed down. Now we bounced into this underneath the man zone, as skinny as it was, okay, and we got that push up, and now we're in this supply zone. So I don't know how much interest I really overall have in this area, because to me, that's a lot of choppy area there. And then if you go even further left, you see another really big choppy. I just feel like this, where it's at now, even though there is a supply zone there, I feel like it's a little bit on the retail chop type, price zone or price area. This supply zone wasn't even strong enough to push through this demand zone down here. Okay. Now this would have been a different story if we would have gotten a break and a close, in my opinion, below this zone, but we didn't. We just wicked in and it just shot up like crazy. It shot up harder. Think about this, guys. We talk about momentum. We talk about velocity of moves. This move up towards that zone was way faster than the move down out of that zone. So this is called hot and heavy. This is called trying to stop a rocket. It's the opposite of catching a falling knife. If we would have had a sharper drop over here and a lazier raise into that zone, then that would have painted a little bit better of a picture to possibly shorten this area. But the reality is, I mean, you can see from a mile away that's just a rocket ship of a move. So I don't know that I'm interested in this supply zone, even though I drew it up for all those reasons listed. But if we can climb above the rest of this, get rid of get past all this, then I think we do have a little bit better of a supply zone up here in this area, 116.85 area, basically right there at the 117 whole number. Okay, I think that would probably be a better spot to target as far as possibly looking for a short on this thing. But yeah, the reality is all this is mitigated area. This is all tested area. I look for fresh zones, so I think that's going to be the better call up here. In fact, I'm going to put an alert up here because the last alert I had was down here just to see what happened there. And again, it's chewing through it as we speak. So I'm just going to throw that up through 1600 my time, the end of Friday, and we'll get yelled at and screamed at if we get up to this area. So that's euro dollar for you. What else did we have? I saw another one up here. The DAX. I saw the DAX. Okay, well, let's look at the German DAX. I mean, yeah, it's pretty well neutral, I do believe. So +1. So it's got good technicals. We're not getting any help at all from the sentiment analysis. And then as far as the eco score, the fundamentals, okay, it's just very slightly to the bearish side. So it's just a little too mixed of a signal when we look at our trifecta trio of analysis, okay? Technicals, sentiment, and fundamental analysis. So that's just kind of your 30,000 foot view. But nevertheless, let's take a look at the technicals because it says it likes the technicals. So we'll have a look. Okay. So just looking at this, looks like we've had a little bit of, former resistance that we're pushing through. Okay. Through that. Now, the problem is, or the challenge is we're bouncing into this daily 4-hour zone confluence. So we're not quite there yet, but really close. Talking about this zone. This is our daily. If I go back to a daily chart, let me reset my chart real quick. Okay. So I'm looking at this daily with a gap showing strength. Okay. As always, I don't trade the gap. I trade the unfilled orders, but that at least shows me that I'm playing in a decent area. Except to me, that's a lot of candles to the left. That's a lot of candles. Now it is some support turning into resistance. So I do like that aspect of it. But when I'm just isolating the idea of supply and demand zones, to me, that's just too many candles. Okay. If anything, I would be obviously interested in the upper part of that, where that 4-hour zone in, because 4 hours, because this picture looks a little bit better. Just a little bit better. This zone was strong enough to take out a swing low. Okay. And keep going. So I would think we would probably at least get some type of reaction. Again, even if it's just nothing more than a push in, react, and then continuation. but I could definitely see something coming out of that. Maybe not the lower end of the daily, but really where the 4-hour meets the daily. Okay. Again, multiple sets of eyeballs on this particular price point right here. Could get a push just from the daily zone itself, but I really, really like to draw in at least 2 or more sets of eyeballs at once, not just one, even if it is a daily by itself. I want multiple eyeballs. So yeah, we did bounce into this zone of demand down here. Okay, we did get that push up. And again, it seems like even though this zone didn't push and break a structure, okay, it basically reacted off of this supply zone. Talking about this area here, got that push down, but it wasn't strong enough to, totally reverse it. So we still have some strength here, clearly. And that's really, I think, the momentum we're running off of, just isolating the technical side of this thing. So yeah, be interesting to kind of see if we follow this path of this red directional arrow I kind of drew up here. But no real trades that I'm seeing at the moment. What else we got, ladies and gents? Where are gold sellers? Oh, yeah, I think I might have pointed that out, but let's just double check again. Well, yeah, look, I mean, the reality is I see a little bit of selling possibly here. I definitely see some selling up here in this daily. And I just think that that's the main points. As always, the higher the time frame we go, typically the more powerful the zone structure is. So the daily being right here, I would think that'd be stronger than this 4-hour that's a little lower. It's also a little bigger. It's also a little more muscular than this one down here. Okay. Again, this one's kind of a skinny. I don't like real skinny zones. I want them to be, something like this down here. Okay. And it's different with every single currency pair, every single different asset, depending on the average true range, and the price points and such. So in general, this is too small. This is about right. if visually, if that makes sense. Okay. So, and then as we step down different time frames, then obviously I would still want to see about this same size. So yeah, I could see a little reaction here. I mean, if I had to place my guess, bounce, slight reaction, but ultimately push through, and then definitely get a bigger reaction here. And then from here, who knows? They're going to go up, they're going to go down. Okay. That's the $1,000 question. But for me, I could definitely see at least some type of path like that if we're just looking at the technicals. Now, depends on what President Trump says tonight. Okay, that could obviously completely change everything. So that's kind of what I'm looking at for that. Yeah, 10 million barrels a day. Yeah, we do have crude inventory coming out. I think today for any of you oil traders to get that added real quick. I think that was today, wasn't it? Yeah, 1.8 million is the forecast for the day. Obviously, less supply if that comes out. Anything below that, then we could definitely see a little push up in oil. If we see much higher number, that could push it down. Supply and demand, ladies and gents. I trade supply and demand zones, but supply and demand really comes from the supply and demand of everything. Okay, everything rises and falls on the relationship of supply and demand. So there you go. As far as me personally, I have had a few alerts that have hit. Again, that euro dollar, which we already went over. I wasn't interested in it for all those reasons I mentioned earlier, overhead resistance. And then the only other one I have had hit was this pound Kiwi. Okay, this one hit yesterday. I was basically looking at this zone right here, which was still inside of this impulse leg. You guys remember I talked about this impulse leg yesterday? We had this 4-hour zone down around the 61.8 level, maybe a little bit lower. We did get a drop into it, and I guess this was Monday, and a good push up. So there you go. I mean, that right there would have presented a pretty decent trade. I've just been so busy lately. I haven't gotten in very many trades, guys. I told you about the ones I got into Sunday. Okay, I had that tiny win on Friday, the small loss on Sunday. That's basically about it right now. But if we map this trade out, okay, I would obviously want to keep alert with this supply zone that we had over here. And you can see where we got a reaction back downwards from this. Okay. Got to bounce in, push down, bounce in, push down. So that would have definitely been, this would have probably been where I personally would have put this take profit just to avoid this right here, this push drop. So, stop loss, or I'm sorry, a take profit here. And then for there, I would want to map out my 2 to 1 from this point right here. I would have probably put my entry right here on this candle. Okay, breaking this 1 hour bullish candle close. So that's not that much. Okay, well, I guess it is 82 pips for a profit. So 82 divided by 2 is 41. Where's 41 pips? And it's still within that demand zone. So I don't know. I would have probably just made it a 1.5 to 1. Okay, I mean, it wouldn't have been the greatest profit. I don't like taking anything less than a 2 to 1. I prefer 3 to 1s or higher, but I have warmed up to the 2 to 1s. I used to be like, I don't know about you guys. I used to be super strict about it, but it's warm. I'm warming up to it, and I'll finish it on this, guys, because you want to see the currency meter. Yeah, let's take a look at that. Da 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 da. Yeah. So again, dollar and the pound are at the top. Swissy, euro. The euro's gotten a little. Let's see here. The yen. Just taking a look at the yen. So it's 37.5. So we were. Let's go down a little bit. 37.5, got a little bit of strength for a day, went up to 50, and now it's back to 37.5. So yeah, that's really the biggest move of late is really just the dollar drop. So the dollar drop and then the pound increasing. Remember, the pound was way down here at 20% just a week and a half ago, and the pound went from the weakest to right there tied with the dollar for the strongest. So it just goes to show, guys, this stuff can change on a dime. All it takes is a few headlines. All it takes is a few high-impact news releases, meeting or missing expectations to completely turn the picture around on the bullish and bearish currencies. But yeah, just to close out, pound and dollar buys, and then Swissy and euro and Kiwi shorts. That's still the main picture as far as what I'm looking at. But anyway, guys, sorry I was late. I'm gonna go ahead and pass it on to James. And I'll try and do better next time. Thanks for the egg, by the way. Have a good day, guys.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream. All right, guys, I am back, and I'm back joined by the one and only Ivan FX. Hey, Ivan, how are you?
Hi.
Ivan, now we need you more than ever.
Okay.
Is the Nasdaq bottoming? Somebody commented today on the live stream and they said, I was there in April of 2025 when Ivan called the bottom of the market to the 5-minute candle, which the question is, give us your Ivan take. Is this the bottom or maybe not so much?
I said it last week, and then people they said they lost complete respect for me when I said that. But no,
it's a lot of pressure. I mean, nobody can call the bottom except for you, I guess.
No, I mean, I take it. So the reasoning that I have for I'm an optimistic guy. I can say that, and I said that it can. I also said that it can fall and whatever. But there's a couple of reasons behind it, and he's going to have the State of the Union later today. He's going to have a big announcement. Even though 2 minutes ago or 5 minutes ago he said that it was up to others to open this trade and whatever. But what my reason is that market now sees the end. Both parties are saying we're open for discussions or whatever. But somebody on the social media said once the average petrol price in the United States goes above $4 across the United States, that's a pain point for U.S. consumers.
Mm-hmm.
And we are there, or we were there yesterday. So maybe that's the reason. It's costing too much.
Yeah, it's tricky, right? Because at the same time that you have this dynamic, you have this sort of headline this morning The Iranian parliament says the Strait of Hormuz will not open. We will not. We have not held any negotiations, and we will not hold them. So there is this interesting thing, though. I wonder with the whole Trump administration being like, all right, we're just going to leave it be, if that is like a negotiation tactic in its own right. If they're like, all right, we're just gonna leave, you guys can figure it out. Maybe in some ways that closes the door for Iran to have negotiations, right? I don't know. It's an interesting head spin that is going on right now, but we continue to have that uncertainty. And I think that if you look at things from what's going on with oil's still very elevated, right? So despite the stock market seeing a little bit of a bounce, I do think you probably want to see technical breaks to the downside on something like oil to kind of confirm what's going on in the stock market. You do have a bounce happening in the stock market, but you're retesting, if you get more lower time frame, if we take a look at like the 4-hour chart, oil is just back testing into this 100 level. And we very well could bottom out and keep going if, Iran is not going to back down, if they're going to, actually lean into this. So difficult to say, but, oil price remains elevated.
Yeah. So I earlier today made like a line on my chart for VTI. There's no significant. I guess there is significance to it, but in my mind, as long as once we cross 80, of course, anything above 60, which was the price before, but anything below 80 to me is we are exited the risk premium situation. Because if you go back previously, back in 2020, 2022 with the Ukraine invasion or special operation, we passed that and came back to somehow just below and used that somehow as a resistance. So that's kind of like a mental picture for me. But yeah, so we are way elevated. And who would I saw today? That fuel airline costs for fuel, just fuel, leads people to, or airlines now, to add fuel charge. I see more and more happening.
Yeah. Well, and I actually think your de-escalation line is a good one, because let me just do some quick math here. That's about a 25% move lower, give or take, from where we've just been at with oil prices. So if you're saying like $4 gas is a really painful spot for the consumer, $3 gas is not great, but it's a whole lot better than $4, right? So to your point, if you get that number down there and stay down there, I think that's the big thing. Is what I've understood is it's duration, right? Because people can absorb, like consumers can absorb a shock to their livelihood spending for a month, a 2-month period, but most Americans are paycheck to paycheck. And so if you have gas prices just staying up for a very long time, it can really erode away the state of the consumer. And I think that that's not worth it. You should not ignore it, because in 2008, that was part of the erosion of the consumer beforehand, right? You had oil price just steadily climbing. It wasn't like in 2008, it wasn't a, straight up in 1 month type of thing, but it was rather like this gradual, like gas prices just kept going up and up and up. And I actually remember as a kid going to the gas station and it being like very expensive for a long time. And you kind of get used to like, oh my gosh, it's just keeps going up. Prices are higher. And that is directly a tax on, the consumer's ability to spend money on other things. And, so that kind of piled up on top of the other stuff that was going on and led to some really painful economic downside moves. So I think that maybe more important than just the shock price move is, do you see oil price kind of do what we saw in 2021 to do it in 2008, where it grinded higher and higher and higher until it, ultimately really hurt the consumer?
Yeah. I think this was 2019 I remember this is cool on liters and whatever. 2019, I think the fuel price was like 9 kroner, so that's what 90 cents per liter. And now it's 30.
Okay, wow.
And a gas tank now is $170 for one tank of gas. Takes you 2 weeks or so to make that happen. So before I have to refuel again. So ridiculous increase. We have apparently seen the fuel price in Svalbard, because that doesn't have tax from Norway, and that's just 15. So now we know that the gap from 15 to 30 is actually the government's taxes. So we are angry because we figured out how much you're actually charging us extra. So today there is a reduction in road tax in Norway to curb this new higher price. But back to oil, it is inflationary. Yes, we can take the hit for a short time, and then we have become used to these high prices now. Like, we had 9, it's now 30. We're like, okay, it's crazy, but we somehow survive as a society.
Yeah, and again, it's one of those things I think we've mostly enjoyed for the last couple of years. A gradual decline in oil price. So now all of a sudden you have this shockingly big price. The question is, does it stay there? I think that really is the most important thing. Is our oil prices, like, even if oil price stays steady here, that is still problematic at $100 a barrel. That is painful for the consumer. And so if you stay there, it's tricky. If what the market probably wants to see is, to your point, that $80 line in the sand would be really nice to get us back under control, and then people can go spend money on other things, which is of course important to the overall economy. Because if gas price doubles for the average household, that is going to and stays there for many months, that's going to impact the spending habits of consumers. So Ivan, this morning dollar index, we had some decent ADP jobs numbers. We had JOLTS yesterday came in pretty close to expectations. Retail sales today were strong. Dollar is moving lower, probably off of the perceived possible de-escalation going on in the Middle East. What are your thoughts on dollar index here? We're potentially double topping around that 100.5 level. Are you bearish? Are you bullish? Neutral? What do you think?
I want credit. I want where credit is due.
Okay.
When I bought euro dollar, I said, when this ends, dollar weakens, and it's weakening, but it's most levels in the meantime. I think this is going to be dollar weakness. One, just the money flow of it going into the war means higher dollar. When the war ends, that should be the opposite. But we have to now price out a couple of rate hikes or so. And when this oil price now reduces and goes back to whatever, we may still have a recession going on. And that's dollar bearish. So you may need to see more rate cuts. So first we have the rate hike expectation, which is legit, like, it's the reasons for it. But then now when that kind of caps out and goes back into the economy, like, we still have elevated oil prices, we still have prices going up, and your salary hasn't changed for the last month.
Sure. Yeah, and I think from a technical perspective, the dollar index has been seeing some pretty impressive higher low type patterns. The question is, do we break that pattern? So if we come back down to 99 and fail there, that could perhaps signal maybe a longer term topping formation happening in the dollar. You have had a really nice upward trend here on the daily chart for the last few months, and that is now being tested a little bit here as again we come right back into what has been that topping type area, 100.5 for a little while. So to your point, if you do see that dollar weakness continue, euro dollar may catch a little bit of a bid. It has been in a downward trend for a little bit of time here.
But maybe on the possibility of a breakout here. I think this 116.25 level, 116.50 level will be an interesting spot to watch for euro dollar if you are looking for upside there.
Yeah. Now, so the target for me, on the top of, out at the top of my head, 119, 120. Because we have seen, well, what generally tends to happen in these risk events is that when we return, will return more than the initial start, because whoever sold got out of it and they have turned into buyers on the way up. So generally, if they start at a 118, you're likely to see 119, 120. So it's a good chunk. And then you said earlier that if Trump now announces everything is over, he's just going to leave it to Iran to figure it out how to open the strait again, and that's going to be a 4% move on S&P. I would imagine euro, I don't know, 100 pips or so, probably or more, unless that's already been priced in now. But
yeah,
that can also be quite a volatile move.
We are seeing quite a volatile move to start. The stock market opened up 15 minutes ago or so. Ivan, this is something I'm worried about, which is with the Strait of Hormuz situation. If the U.S. withdraws, and Iran has been making a lot of money doing their charging ships to go through situation, and the U.S. kind of says, all right, we're going to back out of the region. Could that potentially be a situation where you have Iran continuing to sit on the Strait of Hormuz and continuing to demand things from Western nations, from Israel, from all the other places in the meantime, and kind of hold the world at ransom for a while if the U.S. backs out of the situation, right there, and we've heard the Iranians wanting reparations for the war, claiming that they were wrongfully invaded, all this and that. Their take on it is that they want something in return for this. And so could they, in their minds, justify sitting on the Strait of Hormuz, keeping it closed, and continuing to kind of charge a tax on global oil for a while? It's just something to think about, is that could keep oil price elevated even if the U.S. kind of backs out.
Because now they've figured out how to really squeeze America. Yeah, I don't think they're going to leave Gulf though. They're still going to have their military bases. But Iran said that they needed guarantees to end the war, which was they needed guarantees for not be hit anymore. The other problem here is a new problem. UAE are angry because Iran hit a steel plant or some other steel or aluminum plant in UAE, and there was no Americans there. So now they are being like, well, you are going to pay for that. And they don't necessarily say dollars. So are they now going to start to attack Iran because they feel attacked?
Yeah, I mean, that adds another layer. It is maybe that is kind of what the administration and the White House is saying, is like, all right, we're going to back out and let other people deal with it. Maybe they full well know that a lot of groups are upset with Iran right now. So I don't know how it all plays out. I mean, I think right now, in the meantime, the market is cheering the idea that maybe the U.S. won't make some sort of ground incursion, or is less likely to. We are seeing on like Polymarket and things like that, at least when I checked last, ground invasion probabilities had dropped a little bit in the last 24 hours or so. But still, those are just probabilities, and anything can happen. So again, we continue to kind of watch and wait. I do think that the market was pretty oversold. I know that is hindsight speaking, but we did talk about this yesterday. I was looking at the put call ratio yesterday for the stock market. And interestingly enough, the last few days, you saw a huge surge in put demand. So people kind of making bearish bets on the market. Meanwhile, the AAII investor sentiment survey still shows crowd mentality, crowd sentiment is still very bearish on the stock market. So I think we are primed for some kind of a bounce. The question is there follow through? And I think if you're watching something like the Nasdaq, what I'd be looking at is this major level of what was support to become support again, right? If you're going to feel, from a price action perspective, if the market starts believing like, all right, yes, we've got something where oil prices can actually come down and stay down for a little while, or even improve, then you'll probably see it start forming in the price action here. But until that happens, I do have to look skeptically at this, retracement of this down move that we've seen. If we draw our fibs from the highs to the lows, you're coming into this 38.2% retracement. I'd say if you can kind of confidently break above the 50% retracement, then you look really good. But until then, I think you have to be pretty careful. By the way, that 50% retracement, I bet you that lines up with the 200. Yes, it does. So the 200-day moving average is right here, 50%. That's a technical level where I say, okay, you probably found a bottom. But until then, I think you have to be a little careful personally.
So I think we're going to find resistance in the 200-day moving average. Where this is from April 9th last year, where we had the announcement where he said, well, everyone, their tariffs are over, or like we're not going to do it anymore. But then, so S&P did rise, come up to 200 EMA, but then also had a pullback. So even still, if we now skyrocket, I'm not going to want to pick the high. Sure. So I said a bit jokingly what I said earlier, or tried to divert. But my serious opinion is that once the US goes out or leaves, I think everything is going to fiddle down, and we're going to be okay again. Somebody said earlier that oil price is going to remain elevated because of all the damage. Now, there's two stories here. One is the physical demand, and then there is the ETF for the futures. When the war is over, futures or markets are becoming extremely positive. So that kind of disconnects itself from the physical market and the physical constraints. If you look back to 2020, the economies were still falling pretty hard, even though the markets was being very, very risk on. And we didn't really have a solution for, 6 months to a year later. And market had been pricing that in since, May or June. So a month or two later, then they were starting to go bullish again. So it's really, that's not really the mentality I wanted to have. I really wanted to be, what have we done before in the markets? Not to say that's going to happen again, but because those are two different realities, generally speaking.
Yeah, no, I think that's a good point. Ivan, I'm going to back out and give you a little chance to go solo for 10 minutes here. Cool. Before I do that, hey, if you guys are interested in coaching services, Ivan does do that. You can find him on his YouTube channel. If you subscribe here to Ivan FX on YouTube, you can reach out to him if that's something that you're interested in. You can do one-on-one work with him if that is something that might be helpful to you and you're trading. A lot of traders, whether it be trading psychology, finding a strategy, etc. Ivan might be a great pick for you to find some help in your trading. So check out Ivan on his YouTube channel there for more information. And just as a reminder, guys, we just kicked off the EdgeFinder 40% off discount sale right now. So if you are interested in getting access to our tools and would like some more information about that, we'll drop another live stream link here to where you can speak directly to a member of our support team about setting up a payment plan, whatever you need, etc., to take advantage of that discount while it lasts. Ivan, you've got it from here, man. Thanks for taking over the show.
Thank you very much.
All right. See ya.
See you. I saw another question, and the question was about... was it about S&P? I'm not an S&P expert, but isn't the upside capped since inflation is going up and the Fed wants to have to cut rates? Now, there's a couple of stories that we can go back into here. 2022, or 2020 for that matter, we saw inflation. We saw US going into 2 two consecutive or two periods of recession. S&P falls from February and then bottoms around, as I said May. I do apologize, March. So 19th of March is where central banks across the globe around that time is saying, hey, we are going to use QE. Then what then tends to happen is that we're going to have inflation. So when did inflation kick in? Inflation kicked in from June 2021. June 2021 is about there, and we started increasing interest rates about March 22, about there, and inflation peaks about, I think the inflation peaked around September, October, November or so, 2022. This is, I think is 9% inflation. So in an inflationary situation, S&P 500 rises, but it stops rising the moment and the day we see higher interest rates coming with it. So there is, I think there's a 9-month delay here, where you have the continuity between we have rising prices, businesses are making more money because they could charge more, everything is great, everything's fantastic, until the Fed actually starts to cut. And then we see a downtrend or a pause, and we start seeing S&P 500 really take off in late 2023, 2024, and that's when we have inflation back to kind of normal, about 3% or so. So that's kind of my process here. Is if we now have rising prices, that's actually bullish for the S&P 500 until we actually hike. Now the problem is that this has become very volatile. So the Fed is on the ball for a rate hike, so that span might be a bit more shorter. But rate hiking is bad for S&P 500, or pauses the upside, because it increases capital expenditure, financing costs, and it reduces profits. But in the process of rising prices, it actually benefits the stock market. So I won't be too worried about this not making a new higher high in April. I think that is totally plausible. If everything and all the stars and all the ducks align, then yeah, I think that is plausible, not impossible. But for that to happen, we cannot have wrecked the economy on the way to go higher. So inflationary is upside for S&P 500. Deinflationary is also, well, could cap the upside of it, but the moment and the day we believe that that's the bottom, or we're in a good space, like where we had 1.8 inflation before 2020, that was significant, or that was quite a good year for 2019. So again, not necessarily a bearish trend and everything is going to fall because of lower inflation. But okay, because of what I want to say. Okay, I want to buy euro, and I hope and pray on my two knees and my many toes that we have a pullback. And it seems to be further and further away from the reality. I really want it to happen, but I can't buy the high. I said my target is around 119, 120. So that's a good 300, 400 pips up. So there is, if I miss today, there is tomorrow. If I miss tomorrow, there is Monday. I believe the market's going to be open tomorrow. Oh, sorry, on Friday. But lower liquidity, even though we have NFP markets, I would imagine that it would be open, would be closed in Europe and in America, but it doesn't seem to be. But yeah, so lower liquidity on Friday. That doesn't necessarily mean that I can't trade, but in low liquidity situations is not where I want to be because of spikes. But regardless, we're still going to make our day. Euro is going to be strongest in my analysis. Pound is going to be the next strongest. Also have done some kind of reversal. I have made my little support here that we could come down here. If Trump now Trump announces a ground invasion later today, forget what I said. Okay. Sluggy, watching Euro New Zealand long. I think that is, we are late, but I think it's a great idea. I would also like in that process Euro CAD, probably thinking, yeah, could have legs, not financial but whatsoever. But in my mind is what's get stronger, what's get weaker. So if oil falls, that means CAD lower. And I'm not seeing CAD being so correlated to oil like now, like it's ever been before. So allegedly, Euro is because ECB is the closest one now to being the most hawkish one in Europe. So they are going to have the benefit of it. Second of all, they're going to have the benefit of the weaker dollar. So you're wondering, can they just buy a euro pair? That could be a thought process. But for me, euro dollar should have, in my analysis, the biggest, most polarity. Euro Swiss, for some reason, has had a fantastic run higher. I don't have an entry here, but it has come lower. Okay, that's an interesting price action. But yeah, that would be interesting to me. Yen pairs. Again, that would be euro yen and pound yen for me. Dollar yen, I believe, should fall. But there is a weak situation. So to me, I want to buy yen pairs, but I'd rather have them turn around like they do now. We're coming up to resistance again, same situations all the time. Break the resistance, come back, and then all. So euro yen is coming up. I really want to buy it, but I can't because dollar yen was high. So the reason why I didn't buy when it turned around is fear that Bank of Japan is going to do something. That's been riding my thought process. But it is April, seasonal. TSS is going to go higher. Euro is going to have a benefit from. It's going to have the most benefit in my analysis, my opinion only, from a de-escalation. Have the war ended? Not really. But it can end whenever Trump and US pulls out, okay? So as Nick said, if you want to come to me, have a chat for an hour about trading, about how you can become a better trader. I am the man. I'm the best in class. And if you have complaints, please come because it's going to be fantastic anyways. So, and then you can head over to my YouTube channel. But yeah, on the other side, or the downside, the upside, the downside is you're going to miss out on a great conversation with me. And number two, going to have a bit of laugh. So I love you guys. Don't do anything bad and make lots of profits. Boom.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope everyone's having a great, fantastic morning. Seems like we're having a risk on Wednesday. So we are beating all odds, it seems like. Usually markets pop on Monday, and by Wednesday, they are disappointed and they are in the red. But we're seeing the quite opposite here. So maybe this time is a little bit different. For those that don't know, I'm sure the guest show hosts have covered it here in the past, but there is essentially a strong case for a potential ceasefire in the Middle East. So Trump basically said that he's willing to go ahead and back out of there, even if the strait remains largely closed. And then something about Iran's new supreme leader or new leadership is a lot smarter than before, whatever. So we'll see. We'll see how that happens. But also, too, for the U.S., we did have some good retail sales number, good ADP numbers, some manufacturing PMIs that came out good as well. So I think it was a good outcome here for the U.S. Now, largely the safe haven repricing out of the dollar is what's ultimately leading it to its decline there. But we are now at a potential level of what could be support here, that 99,500 handle right there. So before we reject this level a couple times, as the war was progressing, it broke higher. And then, now it could be potentially be support. Who knows, right? But we'll see. I do like that, though, because I do think that there are some pullback opportunities that I was waiting for especially in the euro and the Kiwi dollar here, trading it to the downside. Ultimately, euro is essentially at that level where I think it may be okay to go ahead and short it here. Ideally, somewhere above that 200-day moving average if we can tap into that. But if not, it's okay. I actually do like this trade idea to the downside. I need to, sit on my hands for a little bit here and see what happens there. Maybe if we get some kind of a V-shaped recovery to the downside, I would love to take that chance. Kiwi dollar too, I love that trade even more from a fundamental perspective. The Kiwi's economy is not looking too hot per the EdgeFinder, and the US dollar, I mean, even if you look at today, this morning, is doing quite well, quite resilient despite what's going on there. So I do like this one to the downside more. The only thing is you would need a bigger pullback, in my opinion. We did hit that 38.2% retracement level. So I was watching this before I came on the stream here today. I like that idea. However, I would prefer maybe the 50 or the 61.8, honestly, for deeper pullback. So we'll go ahead and see. This could be one of those trades, though, where, I'm too selective like I always am, and I just miss out on it, but that's okay. I'm also, too, as far as positioning goes, I am short the yen basket. So short dollar yen, short CAD yen. These are pretty much break even here. Swiss yen as well. We broke out here, which I love to see from a technical perspective. We had this bullish uptrend here. And I was waiting for a break below it, and we got that yesterday. We are now pulling back into that level. So as long as we stay below this, what could be like a trend line here, I think this trade is fair game. This is my preferred one, actually, just because of the positive swap aspect of it. But from a technical perspective, it's been really, really hard to short this because you have no guidance looking left. Usually when you're trading and you're trying to short something or buy something, you look at the left here, left side of the chart, to look at previous levels and stuff like that. But that has not been the case for this currency pair. This one has been trading to the upside. So although it's my favorite one, it's also the riskiest one because there's no technical guidance there. But you get positive swaps. The EdgeFinder is actually showing a bearish reading, which I love to see. And then there's a really cool dynamic going on with the central bank. So Swiss National Bank is saying if it gets too strong, we're willing to intervene to weaken the Swiss, which that gives that upside cap to Swiss yen. And then the Bank of Japan on the other side is saying, hey, if it gets too weak, we're looking to go ahead and prop it up. So you kind of have that dynamic working in the favor of what could be a bearish trend there. But again, you have to reference the technicals. And, with this currency pair specifically, there is no technicals to guide off of. So this is just my first attempt here at Swiss yen to the downside. I think that if you do get a Bank of Japan intervention, money will flow into the Swiss yen just because of that positive swap aspect. And for those that don't know here, I'm going to pull up the EdgeFinder, and this is one of the tools that I use for my daily trading analysis where I make my trading decisions, all of that good stuff. And it's currently on sale right now. So definitely go ahead and get yourself a copy there. But I'm going to do this. I'm going to go ahead and type in JPY here. It's going to pull up all of the JPY pairs and say essentially what I'm trying to do here is I'm trying to sell. So XXX against JPY, right? So anything against the JPY, I'm trying to hit that sell button on there. Now you can see here that all of these are pretty much in blue. So if I were to go against this, I'm paying the swap. I'm paying the interest rate divergence. For example, if I wanted to sell Aussie yen, I have to pay 3.35%. The only one that doesn't have that dynamic is Swiss yen. So that's why I think, from a cost perspective, when you're thinking of big institutions, when they're trying to place trades or they're trying to ride trends or whatever, the cost of doing business is something that they have to consider. And Swiss yen is the preferred one there. So that's why I like that one. Again, the only thing is the technical aspect of it. So maybe this is my first attempt. I could probably take 3 attempts. Who knows, right? Because someone said in the chat, very, very valid. I forget who it was here. Sluggy said, the Bank of Japan has been planning to intervene for the last 6 months, and he's absolutely right. That story is getting stale a little bit, but we'll see if that plays out there. I know that in recent times they've been voicing their intentions to go ahead and intervene, so definitely going to take my first attempt here. Swiss yen, dollar yen, CAD yen to the downside. All right, let's go ahead and look at the comments here. Okay, also check Swiss yen did like 8% correction previously. Also see the gap on the daily. I know the gap on the daily I was all the way down here at 185. I saw that. So we'll see if the Bank of Japan actually does intervene and there's momentum behind it, then I just move this stop loss here. And ideally, I want to trim my risk as much as possible because yen pairs are notorious for moving very, very fast. They have really big ATRs. I also look for shorting Swiss yen, but haven't got my setup yet. Not financial advice or nothing like that. Please, by any means, I'm not responsible for anything you do. But you did have this upward trend line here. Your 50-day moving average we broke here, and we actually did. I'm going to zoom in here. Essentially, you can see my position. It's a little bit. This one's a little bit in drawdown here, barely. But you can see here that we broke, and we are now retesting this area here. So as long as we stay below, I think that's good. I actually do like the break and retest type play, so we'll see how that plays out. If you get a big green candle, though, right above here that fills all of this right here, then most likely the trade's not going to work out. I'm going to get stopped out. So just to be mindful, be aware of the risk there. Again, yen pairs, they move fast. They're very volatile. It's kind of like a gold. Like when you think of pound yen, that's like essentially plain gold when you think about the speed that it moves at. What's your thoughts on pound New Zealand longs? Actually, that I kind of like that. So I was kind of looking at the EdgeFinder here before I came on here, and you've seen a interesting thing happen where you've had anything pound super weak, which has now flipped now. So you can see that pound Kiwi is actually getting a very bullish reading of plus 14. That is probably like one of the highest scores you can get. I think the highest score I've seen is like a 16. So you're only 2 shy from the highest I've ever seen. Drop in the comments, guys. I'm actually curious for everyone in the chat here. What's the highest EdgeFinder score you've seen or the lowest? I've seen 16 personally, but right now you're getting a 14 here on pound Kiwi. The pound has really made a run for it as far as shifting its strength. I'm going to show you by doing this here. I'm going to show. Watch this, guys. This is relative strength for recent data releases. The pound is here in green. Okay, pound was at the very bottom. Right. This is not me lying. Pound from the beginning of the war has been very much struggling here in green. Actually, let me pull up the Epic pen to show you even better. Is it gonna work? It's not gonna work. Dang. All right, I'm gonna have to go task manager here. Epic pen. All right. Give me 1 sec, guys. Okay, awesome. All right, so this screen right here, guys, this is for anyone trading currencies like on a relatively smaller time horizon, maybe day trading to swing trading for like a couple weeks. This is fantastic for you. I love this. So this one shows you essentially data expectations, whether they beat or miss, right? So when you're trading currencies, first of all, you're trading economies, right? And so every single week there's an economic calendar and there's new data releases that feed into the overall health of an economy. If things are coming in really, really good, then the overall economy is going to look in better shape, right? If it gets worse, then the opposite. This one shows you basically in the last couple readings here how things have been looking like. If you look over here down here, you'll see the pound. I'm going to put this here in yellow. It was at the very bottom, right? So the price action reflected that too. Pound was getting very weak against the dollar. Now you're seeing the opposite. Now it's starting to come all the way up here and find its way up into pretty much where the dollar is at right here. So that's why you're seeing that price action in the dollar it is not a surprise. There's a reason behind it. The fundamentals are starting to improve there a little bit. So to answer your question, I like pound Kiwi to the upside. It is moving now. If I just measure it out from a fib level for a pullback opportunity, anywhere right here, man. This is a good zone right here. 38.2, the 50, the 61.8, basically where these moving averages are at. I kind of like that to the upside there. So I don't know if you're in that trade. If you are filled somewhere within here, you are good to go. If you're looking to participate, me personally, which is something I might do, is just wait for a pullback all the way up into these moving average here where you have the 38.2, the 50, or the 61.8. That's kind of my thought process there on pound Kiwi. Good trade, though. Very good reading on the EdgeFinder. One of the highest scores I've seen. Someone sent 28. No, I think there's no way. 11, but I've only had it for a month. All right. Cool. What have you been? Dollar Swiss. Yeah, Dollar Swiss. Dollar Swiss is when it trends to the downside, I've noticed that it trends really, really hard. But you've been trading in this channel for a very, very long time. You broke below it. Now you're up here. This 200-day moving average. So, my thought process, guys, is although the dollar was very strong because of the safe haven appetite, I think that it's still to the upside. Let me explain myself too. So we go to the U.S. economic heat map here. And I think that, regardless of the war or not, I do think that dollar strength is probably the trade to go on. It's getting some bullish readings here. It's at a 60. Let's go ahead and break down essentially everything that's been going on. So retail or GDP as of 2 weeks ago came in soft, so not good for the dollar. You had manufacturing PMI is good, services PMI is good, retail sales good, and this is all kind of going to growth, right? So if these are all printing pretty good, then maybe we get a good GDP print. We don't know, but growth is looking somewhat solid there. When it comes to inflation, that's been the big one, right? I would say the Fed is neutral to hawkish, right? In fact, let's not guess here. Let's go to CME Fed Watch and look at the probabilities. So let's look at probabilities. And we still seem to be on hold for the entirety of 2026, leading up into the last quarter of 2027. So, that tells me that, the dollar is going to be higher yielding currency. Maybe some other central banks, like I know Europe is a little bit more laxed. So I think that dollar index to the upside is probably the path of least resistance. You just got to wait for a pullback, which we're seeing that right now. And then the big one will be unemployment numbers at the end of the week. So that would really influence my decision as far as, long-term dollar bullishness or not. Hey, Marco.
Hello. How are you today?
Pretty good. Markets are moving. We're getting some pullbacks into currencies that I like to see.
Okay.
We did see some chit chatter about a potential ceasefire in the Middle East, which I think markets are loving that at the moment.
Was that today?
It was as of this morning. Yeah. So when I was in bed, I was looking at it. They were looking to end it despite, the Strait of Hormuz being largely closed.
Okay.
And I think the president said that he was accepting the new leadership in Iran, that they're far more intelligent and less volatile than the previous, if I read that correctly.
Interesting.
Here it is. Iran's new regime, or new president, much less radicalized and far more intelligent than the predecessors. And the dollar fell, stocks up, crude down.
Isn't the new leader like the son of the old leader?
It's the son.
So he's basically insulting the father of the.
If anything, he's a young buck wild, just like that. I don't understand that, but yeah.
I'm guessing the markets are putting a lot of pressure on Trump to just try to climb out of this, because we have the midterms coming up in, I think, November. And as far as I got it, again, I'm not into politics. If Republicans lose, then Trump has less power overall, because most of the stuff that Trump wants to do needs to get confirmed by the House, I'm guessing, and both by Republicans and Democrats. So if Republicans win the House, or they have won the House, it automatically gives Trump more power because they're just going to vote for him. Is that correct?
Yeah, so there's like checks and balances when you're trying to pass certain things,
Okay.
and it goes through. And it's not just like the president can say, my face is going to be on the $100 bill, and then it's that. Like, you have to go through a process, and it goes through the House majority there, and so yeah, if you lose all of that, I think the biggest risk is like if you lose the majority, then what usually happens is whenever there's a next president or a next house or team, they can pretty much backtrack everything that was done, right? So I think that's what they're trying to avoid there. But that's a real pressure point, really, in politics. And I'm not a politics expert either, but just at a high level, the midterms are very important for that reason.
Yeah.
And so I do think that there's a lot of pressure for the president there. One of his biggest objectives is, lower interest rates, right? And so much so that he's trying to get a new Fed chair in there that's going to, help him achieve that objective. And you're just seeing, yields rising now. Obviously, now today they're falling here, but essentially everything that he was trying to accomplish was really becoming a lot harder and almost impossible. So yeah, like you said, I think there's just a lot of pressure from the markets.
Yeah. I did take a new position, which I think you have as well. So let me talk about that briefly. So let me just remove your chart, add my chart. So it is a sell on Swiss yen. Essentially, EdgeFinder, let's put it in there, CHF JPY. So neutral at the moment, but it was bearish yesterday when I made the decision to take this position. I was pretty much looking for a bit of a pullback to this level, sort of pullback to the break and retest. So yes, we flipped neutral today, but I already made my mind up yesterday. And if we go to the heat maps, we go to Japan. Japan is 37.5. Compare that to Swiss, which is worse, so 16.6. But I'm looking at the whole picture, and mostly this is a bet on two interventions. Basically, it's a bet that UJ won't go above 160, so that the Bank of Japan will defend the 160 level by selling US Treasuries, because the yen weakness is hurting imports. And you have possible intervention from the SMB, which is the Swiss central bank. And they have expressed a lot of interest, as we know, about the 0.9 level. So essentially, the SMB doesn't want to see a strong Swiss franc, while the BOJ doesn't want to see a weak Japanese yen. And in my opinion, that creates a perfect storm, a perfect catalyst for Swiss yen to go lower, because both central banks would like to see this chart go lower. And we know that the central banks are the biggest mover of the Forex markets if they want to come in and do an intervention. You also mentioned this is positive swaps. It very much depends on your broker. For example, on my IC markets, it's actually break-even swaps, or at least a little bit negative. But if you have a good broker, you could even get positive swaps. If we go to the EdgeFinder and we go to the where is the carry trade scanner? I think it's here. Okay, under macro scanners, CHF JPY. Yeah, basically carry direction is a sell. You're getting a 0.75 divergence. Depending on your broker, you can even get positive swaps on this one. So holding it for a month, 2 months, 3 months really is not a problem. My stop loss is around 202.78 above this swing high. And it kind of made sense in terms of the fib level, because it is above the 618 and it is above the 20 EMA. And how do you have the trade structured? Is it pretty similar to this?
I'm looking at your screen here. I think it's the same 203, right? 203.
Yeah, let me bring your chart to the stage. So remove mine, add your. Okay, cool.
At 203, it seems like right above that. It's above the 50-day moving average, and then the swing high there.
Awesome.
Yeah, 203. And then if you were to see confirmation of an intervention, this thing would move really, really fast. And then from a trade management standpoint, I would like to trim the risk as soon as possible, just because the yen pairs are very volatile. They're notorious for moving. Like if you think of pound yen, that thing moves really crazy. So that's kind of what I'm looking to do there. But it seems like we do have it structured around the same there. So my initial stop loss level is 203. And then my take profit is 192 there. Someone did mention that there's a gap here to be filled all the way down here at 86 or something like that, which, I mean, maybe, but I'm just targeting that 200-day moving average essentially right there. So 200-day moving average lines up right at that 192 level. So that's going to be my initial take profit. If this thing just starts to move crazy, then yeah, I can probably move it down. But for now, I'm pretty satisfied with 713 pips.
And we broke that trend line on the daily, which is also nice. I mean, this trend line has been holding for almost 1 year now, which is a long time. So, I mean, I'm looking at the worst case scenario. The worst case scenario would need to be that both central banks decide to not intervene. So that is almost impossible, in my opinion. Yes, we can get stopped out for sure, because you never know at which level the central bank will step in, but there's a very, very high chance that Swiss yen won't go above that high, because it either triggers sort of a problem for the SMB or a problem for the BOJ. Either UJ goes above 160 or Euro Swiss goes below 0.9. I'm really loving this position. I don't know if in the past we have had a time where both central banks were looking at an intervention. I should probably research that, but I think this is a pretty cool trade to have on.
Like you said, it gives you a hypothetical invisible ceiling in a way, for this chart specifically. So I do like that aspect. And it, you know what, like the move, if it does happen, will be so big that I'm happy with taking multiple attempts, you know, even if they're losses. Like I think overall it would be a net positive outcome when the move actually happens. The thing is, the timing thing is super uncertain. I'm not going to claim that I know. If this thing starts to move tomorrow and the Bank of Japan intervenes, I got lucky. That's what it was. But I'm just, you know, being mindful of a level, being mindful of the relationship that there are going on with these central banks, and hopefully I can catch it. So not financial advice, guys. Remember, this chart will move really fast if it does. So just make sure that your risk is defined, you're acceptable with the stop loss hit, that's pretty much it.
Or because it's the 1st of April, maybe we can say it is financial advice.
Maybe. Think from a legal standpoint, probably not.
Yeah, probably.
No. Speaking of that, man, where is Nick? He's playing Minecraft. I think he's setting up the server. So we'll have the IP address here dropped in the chat. You can purchase the EdgeFinder through there, through the shop, and then we can, you know, do that. I don't know if you saw that segment. I was gonna do something similar. I was gonna have the relationship manager from my broker call me on stream and say, hey man, you're getting a margin call, but I didn't. I was like, I don't know if he's gonna go with that. So
did I miss it? Did Nick do something on his stream?
It was kind of funny. It was kind of funny in the beginning.
Okay, I'm gonna have to take a look at that. I just want to post the link to the form before I forget. So let's just add my screen. So if you guys want to participate in the DNA funded giveaway, there is a JOT form you can fill out. It's a 5K one phase account. So just go to the comments, fill it out, and you'll get entered into a giveaway. But I'm loving Minecraft server idea. I think it's a pretty good idea for A1 trading. We should all jump on that. As far as my other positions go, I have a buy on US oil. I have a sell in UJ. And yeah, of course, I have the sell on Swiss yen. US oil, I did some reading, some research, and what I noticed is the shock so far has been pretty small on oil because there has been a lot of reserves. So there has been kind of a surplus of oil in the system. That's why the shock was not as huge as some people would have expected. The problem is the reserves have dried up. So all of that is now gone, which means if there's another shock to the markets cannot really survive it. I mean, they can, of course, they will, but the prices could go a lot crazier than they've gone on, let's say, the 2nd of March. I'm still thinking that words or actions, not words. I'm still seeing only mostly talk from Trump. I think I saw something from Iran that they're not in negotiations, but again, who knows what's happening. I'm seeing one thing that is for certain: the Strait of Hormuz is still closed. So what's your take on it? I know you're a bit more positive than I am. I know you're a bit more... I know you're anticipating sort of a de-escalation. Has that changed? Have you gained even more confidence? What do you think?
Like, I think the markets will still like the idea of, even if there's a war, but at least there's passage through the strait. I think they just want it to be opened up one way or the other, right? Like, even if there is a toll that you have to pay, whether it be $2 million or whatever, like, I think markets will like that. I think the biggest thing right now is that it's shut down. Insurance premiums are sky high, making it somewhat impossible to pass through. I think even if there's like a toll of like $2 million a ship, that just gets priced in. And then instead of having $60 a barrel, you have 72, maybe, I don't know, something like that. But I think just higher prices of oil for a long period of time, that creates a lot of trouble there. As far as the progress goes, I want to say, I want to be optimistic about it and say maybe it comes to an end. You've seen open communication from both sides, whereas before it was one-sided. As far as like indecision goes, oil's still elevated. It's still at 98, shy of $100. If it stays elevated for too long, then there's going to be a lot of hurting from that. Some countries more resilient than others, right? You have the US, which is a little bit more independent than you would someone, let's say, in the Eurozone, right? So something to think about there as far as currency strength goes, and who can absorb this hit better than others. That's why I think you're seeing like the dollar strength there. And that's why I'm personally like, I like the euro dollar short idea. We are getting into this level here. I might take it just to even add some diversity as far as my positioning goes, because right now I'm just short dollar, right? But as far as to answer your question, I would really need to see, for a resolution standpoint, I would really need to see oil like below $90, right? I think anything from 88 to 72, the markets can digest that and move kind of business as usual in a way.
I would agree. I think, we're seeing today the stock market is again catching a bid, if I'm not mistaken. S&P up, which is breaking the pattern we had from the start of the war, from the 2nd of March. So things are different, definitely. Gold is moving up, which is also weird, or not weird, but the pattern has shifted. Before it was just selling off like crazy. Now it's actually catching a bid. So something is different. I think today, tomorrow, and Friday will be key days to see if we get a pattern repeat or if the pattern has been broken. And I think the S&P is perfect for that. So will we slide lower? Will this create a V reversal, or will we actually start pushing higher? One thing that I do know, and as far as seasonality goes, last few days of the month, and especially the first few days of a month, for example April, tend to be bullish for the stock market, because there's flows into I think 401ks and just generally big players buying the stock market. No matter the level, no matter the macro environment, they're just doing it because they need to be exposed into the stock market. So inflows are positive at the beginning of each month. That's why you're also seeing a bit of a bid. That's why you also saw the DXY kind of going higher at the end of the month, because that is corporate buying of the dollar. And now that's done. 1st of April, month end corporate buying is done. So the DXY is selling off. Those are not the sole reasons, but they are for sure some extra reasons. Anyway, to conclude my complicated speech there, I'm just looking at the S&P, and I'm looking if this thing slides lower for the rest of the week. I'm looking if we get a V-reversal, or if we actually get a continuation higher. If we do get a continuation higher, that would give me some confidence that yes, situation is improving, and we may start to flip to actual risk on.
I agree with you there. That's the common pattern that we need to overcome at the moment, is by the end of the year, the market's red. So we'll need to see how that looks like. Yesterday was a 3% day. Now we're looking at a 1.5% day on the Nasdaq, somewhat there. So, I think that 200-day moving average is something you need to overcome, because you can very well test that level. And if you reject it, that is very bad. Like, that is a technical bearish thing to see if you test that 200-day moving average and reject it and start making lower. So that's not a good thing right there. I'll go ahead and allow you to do your segment here for the DNA funded challenge that we're going to do here. So a comment worth mentioning, guys. Imagine losing your house because of the trade Marco told you about, and Marco goes April Fools. April Fools, guys. April Fools will disclaim that there. Trade safely. Markets are volatile. There's tensions in the Middle East and stuff like that. But Hope you guys have a blessed rest of your day. And I'm looking forward to that Minecraft server. I've been playing with my siblings like on the weekends for like an hour.
Okay.
We're trying to beat the game. It's a little bit hard, but I'm down for committing some time on the schedule there for an A1 trading server. That'd be pretty cool.
Yeah, that brings me back to when we had like really bad PCs, and you would set up a million TNT explosions and basically cook your PC. That was like 10 years ago.
I used to play in middle school, man. That was my game, and I used to play with my cousin Nathan, and we had made videos, like YouTube videos.
Awesome!
Yeah. There, I can't find
the channel name.
Huh?
What's the channel name?
It was Gecko 55, but I don't know if it's still active. But we'll see. We'll see there. I'll try to find an archive or something. But yeah, it'll be really cool to bring back the memories.
I'm sure someone in the chat has already found the channel, so
we'll see. If you can, send it to me on Discord.
Well, thank you very much for the joint segment, Alan. I think I'll see you tomorrow. We can see what happens to the Swiss yen position. You're also in UJ sell and GJ sell, right?
Correct.
Awesome.
Yep.
Awesome. I think that's a pretty good play at the moment. So yeah, thank you and see you tomorrow.
All right, man. See you. Bye.
See you. I'll post the link to the form one more time. So let me copy the jot form, paste. Again, if you want to participate in the DNA funded giveaway, fill out the form and you'll get entered in. I think all of the emails have been reset. They usually reset once per month on the first of the month. So you can use your old email if you already made a submission. I also want to mention, if you want to get funded, you really can't go wrong with DNA funded. So it's a really good prop firm. There's a big broker behind them. They use Trade Locker, which automatically closes your trades when you hit the profit target, and you get a built-in position size calculator, so you don't have to waste time using this crap. Okay. I've had a great experience so far. Trading has been pretty good. I've passed the phase 1 of a 25K, phase 2 passed, now onto the funded stage. And unfortunately, I'm in drawdown minus $492. But part of the game, part of the probabilities, I'll just continue to execute. If you want to get funded, the code A1Live gets you 25% off any DNA funded challenge. So A1 Live, 25% off any DNA funded challenge. Let's check the comments. We completely missed the PMIs. Let's see, PMIs. Wednesday, manufacturing. They came out pretty close to the forecast. A little bit better, but this is not what is moving the markets at the moment, in my opinion. Yes, NFP could move the markets, absolutely, but these smaller data points, such as the JOLTS, the ADP, the retail sales, the manufacturing PMIs, I don't think they're going to move the markets much. I think it's all about US and Iran at the moment, okay? Sluggy says, Marco, I see you're hedging selling gold and buying S&P. Yeah, but this is gold against the euro. So there's no hedge in here, meaning there's the S&P is paired against the dollar, but gold is paired against the euro, and this is just the pound and the yen. So there's no correlation, or there is correlation, of course, but as far as hedging rules go, this should be fine. So if you are trading DNA on a funded stage and you want to trade gold, you can trade gold against the euro, and you can avoid the hedging rules, which is like a small hack. What piece are you talking about, and what does it have to do with the soil? Okay, this is something that I don't know what you're talking about. Good to go for gold against the euro. That's pretty clever. Thank you. They had gold against the euro, which I didn't even expect, but I just found it by accident. So it's a good option. Yeah, DNA doesn't allow hedging against the dollar. That is true. Traders still keep an eye on them to know what to do. I closed my hedge gap trade of UK oil and US oil, euro dollar. Okay, we can do EU. Let me also check the schedule to see. I think Tiger is coming on after me. Oh, no. Okay, no Tiger today. No worries. Euro dollar, I had a position on, got out for break even. By the way, all of these trades were signals in the A1 Discord. So fortunately, I got out just in time for break even. Oil was a signal. UJ was a signal. Swiss yen was a signal. If you want to join, I have the discount code Marco, which gets you 45% off this. Oh, sorry, 25% off. Okay, so code Marco, 25% off. Join the Discord, get all of my signals, all of my positions, and yeah, take advantage. Euro dollar, what's my forecast? I'm leaving it alone at the moment. I'm being patient. I'm a bit unsure. So let's just, why do I have all of these? Anyway, let's not hide it. I don't want to buy. I don't want to sell. I just want to wait out the current situation. We're starting to flip from risk off to risk on, but we're not fully there. Personally, it's all talk, no action. The Strait of Hormuz is still closed, which is why I'm pretty happy to keep on holding my buy position on oil. But you never know what's going to happen. Iran is starting to get vocal, which is a bit of a risk on play. Let me see the breaking news. Let's take a look at that. Let's see. It's slow today. I don't know why. Iran would welcome Russia as a mediator. Okay. Well, that is good. You know, Iran is getting vocal at least. This doesn't mean anything. Or just anything that Trump says doesn't mean much. And I think the markets have started to ignore Trump, which is good. Tiger Woods. Yeah, Tiger Woods is a regular on the show. That was at least before he got into a DUI. So once he recovers, he'll be back. Let's do the giveaway. Let me copy all of the names. Today is the 1st of April. 1st of April. Okay. Starting with Arthur Bernard. Copy. Go to the wheel. Paste. Spin. By the way, it's a 5K one phase account. And I have a lot more accounts to give away. I'm usually, or I do give away one account per stream. If you want to participate, you can find me every single day on the A1 Trading live stream. Ariel J, congrats on being the winner. I have your contact information. So after my segment ends, I will send you a code to the free challenge. And I just want to repeat myself. If you want to get funded, A1 Live, 25% off any DNA funded challenge. And this is not an April Fool's joke. This is an actual code. Okay. So what else can I look at? USDJPY is in profit, but again, moved away from the intervention levels. Looks like more players get scared pretty quickly. So as the price goes into the crucial level, markets sell off pretty quickly. We already saw it happen on the 19th. We're seeing it happen today as well. I don't mind holding this position. I think it's a pretty good position, especially if if we get an actual de-escalation. The dollar, I mean, it should sell off. The dollar should sell off, and you should get bearish price action on UJ. You might ask, why do I have the Nikkei? Why do I have gold on the watch list? Well, these two things I would love to buy if we get a de-escalation and if we get a bullish reading on the EdgeFinder. So let's take a look. Gold is currently neutral. What about the Nikkei? Nikkei neutral as well with a score of 2, which means it's not that far away from the score of 5, which is bullish. So Nikkei, but even if it was a bullish score, I would still wait for a more clear de-escalation. De-escalation on the Nikkei. Nikkei is going to be the first thing I buy. If we get an actual de-escalation, I'm talking actions, not words, Nikkei is going to be the first thing on the list. I was already in a position. It worked out pretty well. I do want to re-enter that position, and I think we can pretty quickly go back to all-time highs. I think that is very easily achievable and could easily happen. Comments. So this is the first time euro-dollar is not sold out after an oil crisis. We can still go down. If you have been following me in the A1 Discord, you know that there were 3 times in the past, 2008, 2011, 2022, when the European Central Bank hiked interest rates going into an oil shock. Every single time it ended bearish for the euro-dollar. We have the same situation right now. The ECB wants to hike into an oil shock. I think long-term that is bearish euro-dollar, but we could get a bit of a move up. Long term, I'm talking 3 months to 6 months, we should be lower. That's at least my forecast. I'm not willing to place a bet on that, but that is my forecast. Okay. Took Euro CAD breakout. CAD may suffer. Possibly. I'm in a similar position, but on CAD yen, since CAD will sell harder if the escalation. That is correct. CAD yen, not a bad position to have. If this large uptrend breaks, that would be nice. You know, this could be a pivot. That's what I'm betting on as far as the Swiss yen goes. I'm betting that this is the top. I'm betting that the central banks will defend this level, both the SMB and the BOJ. So yeah, that's what I'm betting on. Check out how much the Spain stock index has recorded. IBEX. Spain 35 cash, is that the one? To be honest, I've never looked at this, so I don't know anything about this. I don't even think I can trade it. Like on my IC markets and Darwin X, Zero, and FTMO, I'm sure I can't trade this. So I usually don't look at things I can't trade. But as far as this Spain 35 cash goes, I don't know. I don't know anything about it. What I do know is the Nikkei. And the Nikkei, the new Japanese Prime Minister, she is dovish. The new government is dovish. There's going to be tax cuts. Money or capital is flowing back into Japan. The carry trade is unwinding. Pretty much every single fundamental data point or every single macro data point is telling me that the Nikkei wants to go up. That's why I like it a lot. That's it from me. I'm out of time. Don't forget, there is a huge sale on the EdgeFinder, 45% off on EdgeFinder. Code is Marco. Okay, code Marco gets you 45% off. This is only for April. This is the anniversary sale. Thank you very much for watching. You can catch me tomorrow. I wish you all the best for the new month of April. And let's see if we can make some percentage. See you. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.